Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we got a non-farms today. This is a little far. Zero Hedge is suggesting that the number will actually be negative. That would really be something if the non-farms number was negative today. But I don't think that's going to happen. I really don't. I think that it probably will be better than expected. I mean, that's the way that it's been going, right? Kamala has to boost the numbers for her re-election bid, right? Well, treasuries are down a little bit from yesterday, although they did recover from that pretty ugly selling that we had last session. Again, apparently because of UK budget concerns and some sort of a VAR shock. S&P 500 pushing up here, but they had an awful day yesterday. Really, I mean, it's not terrible to be back at this range, but that was a pretty ugly drop. Oil coming back up into that 72-ish range from before the rollover. Gold and silver fell off hard yesterday as well. Kappa, kind of down there. Japanese yen holding its gains from yesterday, not bad. And Bitcoin giving up like most of its gains that they've had this past week. Wow, that's actually pretty wild pullback for them. All right, well, this non-farms, they're looking for a headline reading of 101K versus a previous rating of 254. And something tells me it's going to be more like 150, but I got to be clear here. I am totally guessing. I really do not have any kind of good information this time around to tell me what direction it's going to be. Only that the street is kind of whispering that it's going to be low. And I actually do see a lot of reasons for it to be low. It's just that, like, every time that they say that, it surprises them, right? So let's see what happens. If it comes out and it's a negative number, I'm not going to trade it. But if it comes out and it's a negative number, that could be a pretty huge deal, right? Simple clips. The new trend is starting in the Euro USD. There is definitely something going on in the dollar, my friend, for sure. And the British pound moved pretty big yesterday. Okay, wow, that was all over the play. 12K, so it wasn't negative, but it was pretty bad. That was pretty bad. Oh, I don't know if I can catch that. That was pretty wild. I mean, I'm seeing a spot. It could maybe get filled at 19, but... Or maybe could have. I think it's probably too late. Now... Let's see here. Where is... Okay, so private payrolls was negative. But where is the unemployment rate? Ah, yes. Unemployment rate in line with expectations and the previous reading at 4.1. And average earnings a little bit higher than expected at spot 4 versus spot 3. Well. So where are we relative to the rest of the week now? Oh, this isn't even a huge deal. Oh, you know what, though? I don't think that I have... No, I do. How come it's not... Oh, there we go. I was like, why is it not showing? All right. So really into levels from 2 days ago. That kind of suggests that they could run a little bit if they wanted to. Now they're starting to give real numbers, says Uzi. Maybe. Yeah, they know that they're going to lose, so they got to put the real numbers in. You might be right. You might be right. Well, I would expect, based on what I was seeing in options and everything, they were saying that we were going to get like the S&P 500 would drop 1.4% potentially. Where are we at right now? They are up 0.4% on the session. I could maybe see a sell here. I think, though, that this really strongly puts the treasuries on route to rate cuts. You know, probably all of this. Yeah, I don't know, man. It might be the biggest favorable sign of a Trump victory, says Uzi. You know what, Uzi? Overall, what I'm seeing, just from my little tiny position that I can see here, is that over the past month, the labor market has slowed considerably. And I would expect the pace of hiring to be relatively mediocre over the next 2 months as well. And heck, you could see the S&P 500. Well, okay, so now they're going to turn this into a big buy. They could. But I don't know if this is necessarily a good sign for the S&P 500. Is there anything selling? The only thing on my board that's negative is natural gas and 6S. Swiss. Well, that's pretty, oh, it's interesting. So the BLS, my new squawk is telling me that the BLS is saying that it's not possible to quantify the effect of storms on the payrolls. That they're not sure that it's really, then it didn't affect the jobless rate. Yeah, I mean, I really don't think that the decline that we've had in the labor market, in the pace of hiring rather, is really due to the storms. It seems like an across the board thing, and it may be just a little blip before the election, but it seems to me that companies have stopped hiring and or are laying more people off. They're not doing like quote unquote layoffs. They're doing soft layoffs. But I mean, as people who were hit by the storm, it was 2 days off and a couple of slow days. People hit by a storm with a business and employees. Yeah, like I would expect it to have some impacts to GDP, but not necessarily to employment. It seems to me like a thing happened and everybody's moved on. Interesting, though, that they're making that note. I don't know. The best place that I saw within this noise for me to have gotten in is at 18. And it hasn't extended too far from that, and is kind of doing that thing where I'm like, Seth, if you had gotten in at 19, or let's just pretend that I was in, they'd be, Seth, we know you got in at 19, and we're going to come down and get you back to break even and stop you out. Like when it's within that pullback, I tell you what, man. Like if you look at the chart here, okay, you have this big old push, and then there's this little pullback-ish area right here. You see it? Where's my pen? I don't have the pen on. It always comes back to that. It always comes back to that. And then it will go higher. Seems to me like that what always screws me over. It's like I think this is big enough news that they're going to extend, and then they mess with you. People whose roads may be blocked or flooded, or whose power may be out, people will legit be like, my power's out, but just don't vacuum. Live Action says these numbers are ridiculous. Well, the Zero Hedge was warning that it could be negative. They was saying, every time that they say that, they're wrong. But they were right this time, so. But I was, when I was saying, hey, I don't know if this number is really going to do that. I was kind of saying, well, things look like they've slowed down to me. But every time this number comes out, it doesn't reflect that. Right? Now the number's finally reflecting that. Well, okay. Not the best thing for us. Not the best thing for me. I guess we just have to make a living on YouTube, right? Fake news on election week. No, I really think that the labor market has genuinely slowed. So in the past, like what? It's been like 5 weeks now, I think. Because it was at the beginning of, or the end of last month that I was laid off from my day job. And at the beginning of that, well, especially before that, I was kind of getting like messages on LinkedIn and things like that. And at the beginning of that, I had a couple of recruiters and stuff. Most of the recruiters that had been messaging me were people that, weren't the best recruiters and were like just searching for people. And I kind of come up at the top of the list, But since that time, the recruiters have really dried up. And I would say also that companies are really, I don't know how to put it. Okay, let me put it this way. The last job that I got, they did 2 interviews and they gave me a technical test. And I did really well on the technical test, apparently. And, they hired me, and it was like within a week. And all of a sudden was like, oh, I'm leaving the job that I've been at for 7 years. Right? That was maybe a warning. Or, maybe that was a red flag that I should have heeded. I kind of look back on that. Like, that was they hired me a little bit too quickly. And, I did it in a situation where I knew that the market was vulnerable to something. So that I was going into a vulnerable market because it's cars. But I did it. I shouldn't have done it. But it was really fast. And at the time, I was getting so many things from recruiters and stuff all the time. All the time. Right? And this is basically like a year ago. Now, I hardly get any messages on LinkedIn. And, for the jobs that I have like 5 in the pipeline right now. So how do I have 5 in the pipeline right now? You interview through them and then they don't give you an answer for like 2 weeks. Like it's not just like, oh yeah, they're probably telling you no and they just haven't gotten around to telling you yet. No. I've had some where it was like I interviewed and then they don't make a decision because they're interviewing so many people. Like they're interviewing like dozens of people for each role. So for some reason, the employers have kind of been like, we really need to be sure that the person that we pick is like the right person and that could fit and all of these sorts of things. So then on top of that, there's this whole like, oh, well, we don't really want to do anything too crazy before the election. So I think what will happen is I think at the beginning of number, you will see a pickup in hiring as people pick those processes back up. Then it will probably be slow again. And it will probably take a few quarters, even potentially, for the employment numbers to kind of come back where they should be. Yeah. And I would further say that I don't think that the past numbers are fake. It's not that they're fake. But they are very deceptive. right? What has happened is the private market has been weak for some time. And the reason why you get all of these economists, especially on the left, being like, oh, but this is like the greatest market ever, and all of the signs are really strong, yada, 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 is because it's all been coming from government. Like, all of the hiring and all of these other things have come from government. Which kind of makes sense that, like, here, just before the election, that the government would kind of pull back on that hiring, right? But the problem is that then Donald Trump gets elected, and then they're going to cut government. I think that we could be in for a real recession here. I'm concerned, like, the overall trajectory of rates and everything like that seems like okay, and I can totally see the soft landing scenario. But if Donald Trump is coming in and, you know, like, all of the growth is coming in government, and he cuts back in government, that's going to hurt the economy in the short term. And then you could possibly get tariffs on top of that. Yeah. Couple of different things to think about, huh? But I'm you know, one of the things I said at the beginning of the month was like, oh, well, if this next one doesn't turn out, I might not be able to find something until next year. Well, I think that was probably wrong, because I just keep getting stuff in the pipeline. I don't know how, but it just they just keep coming. So there is stuff, and some of these I actually think I stand a pretty good chance of getting. But there probably is going to be a soft period here. And there's still that scenario where I have to become a ski bum, right? Go buy a really cheap snowboard. It's business networking, dear. $25, huh? Ah, okay, sorry, I missed that they extended there. Yeah. Although the cumulative delta in the treasuries is not that spectacular. Yeah. Well, one thing I can note is that all of our indicators appear to be working correctly today. Did a little bit of work on that last night. Oh, but the thing is not working. You see the thing behind me? The thing is not working. Let's go get on that machine. I forget the command. I see my problem. You cannot use that home directory bit because it's running as sudo, so it's going to be different. So we need to run it as -home -pi. We'll just run it manually this time. There we go. Too bad you can't see it very well. Here, hold on. You want to see it sharp? I'll move the microphone out of the way and do it, and then you can see it. Not bad, not bad. It's so funny. I put all that work and everything into it, you know, to have that in the background, and like, you know, it's so blurry you can't even really see it. But I couldn't really find anything that was like most active tickers, so I instead went for biggest gainers. So these are what you see behind you, behind me, behind you. I can see behind you. You see it too? No. What you see behind me is the top gainers, top 10 gainers on the day. Well, I must say, we are now 18 minutes post-news, and the Treasury market is unusually quiet. He says we'd also have to consider, as per the job numbers, that if the storm were the catalyst, we are essentially saying that like 4 states are responsible for nearly the entirety of job creation. Lol. Yeah, I agree with you. I mean, maybe it's going to have some effect. What that effect is, I don't know, but it certainly can't be responsible for it to being like almost 100K below the consensus expectation. Similarly, I think that the election is having an impact, maybe more of an impact than the storm, but it still doesn't explain the huge drop-off. And I think that the other side of it is that companies are just really feeling the funding costs now, man. It's just credit is really expensive right now. So I think, though, it's still important for us to note all of these things, because I do see a couple of things in the context of this that suggests that this month was a particularly soft month, and that future months will not be quite as bad. Like, I don't expect that in November and December that we're going to get back to 250, but I don't think that they're going to be as low as this month. And what we might see is this is kind of a drop off and then like a slow recovery, and by March we're back to 250s. I would hope, at least. If we're not, then that means recession. Right? Because there's this whole thing that's like, oil is spiking? I'm not seeing that. By the way, I need to update all of my DOMs on here, don't I? I think we go to X now, right? I have to update instruments. There we go, guys. I was able to remember the month code without having to look it up. Yeah. October is V, November is X, and December is Z. Why they picked those letters, I don't know, but that's what it is. I think that they started out as like, okay, you know, let's have the letters match the month, but then they wanted the letters to be still be sequential. So once they got like halfway through the year, then they had to start using letters that didn't really match up. That's what I think it is. then what are we? Oh, we're in Z in oil, huh? There we go. Let's see here. Will Laurie asks, you guys managed to bag anything? No, I did not. I thought of buying at 19, but it was too fast. It was too fast for me. I just kind of sat and watched in awe as this thing, you know, that number just came out like monster, man. It really was a pretty jarring move up, wasn't it? Actually, funny that we're not quite a whole handle yet. Well, let's see here. You got 21s on the T-note? Oh, that's not bad. See, it was like at 19 that I was thinking about clicking. And it was like already fast. And then I'm like, it's not going to come back. And it didn't. But I should have been like, oh, let's just click there. Should have chased it a little bit. And then I would have been in at 21 as well. That's where I would have caught it. Only 46 basis points price. Well, it's kind of be weird with the interest rates. Like the labor market does need the rates to come down. But can they bring the rates down quickly enough to make a difference? I'm starting to wonder. You know, so there's this whole thing that like when the employment market slows down, then consumers stop buying stuff. And then that can very quickly turn into a self-reinforcing cycle that leads to a recession. And the question is, how weak can the labor market get before that spiral is inevitable? You know, part of me does wonder if we've already crossed that bridge. You know. Live action. I've been getting terrible fills live with my buys and sells stops the other day. It was so bad on Newsbreak. I was literally filled at the top of the spike. Wow. That was pretty bad. Well, live action. I would say overall that while the resting liquidity is okay in the treasury market, in the markets overall, the kind of like more broad measures of liquidity and like they're just not there. It's like the liquidity is just not there. So like when you get a big spike or you're getting stopped out, like you definitely get the slippage. You definitely catch the slippage right now, but because the liquidity just evaporates. Uzi says, not for nothing, but with a stop order, you kind of give up all expectations and guarantees of a price. That's why I don't mess with that kind of a trade. Yeah. This reminds me of the time when I caught 10 points of slippage on the S&P 500. Do you remember that? That one is worthy of investigation, man. It's just like a normal market, and then there's this little slip up out of nowhere, and I literally, all of the orders pulled, and I literally take 10 points slippage, and then it just goes back to a normal market the rest of the day. There was no news or nothing. They just decided to stop me out and execute me 10 points away. Yeah, it's just a price marker to tell your platform to execute a market order. You're at the mercy of way too many technical factors. Yeah. Like, and that's why I, you know, it seems to me like I'm okay. I don't know. I don't think that I would have placed a trade if I were trying to place these kinds of trades today, but it seems like I'm okay at calling the news or the economic numbers. But I don't think that it's a winning trade in the long run just because the slippage. Like, you're going to get a trade where you're wrong and you just get screwed over so hard that it's not worth it. Uzi says, Internet Archive has not been archiving since 10/8. Google Cache has stopped caching the Alexa service, the one that used to rank web traffic, not the Amazon virtual assistant, is gone. Well, yeah, and there was this whole thing about like them being hacked. Yeah. Which, like, why would you hack the Internet Archive? Cover for something else? I don't know. I've been getting YouTube videos about that, actually. But I didn't really watch them. Uzi says the ability of sensors to memory hold the internet is growing. Maybe. You know, it's really weird to me to watch these people try, right? Because they're really like boomers. I don't think that they really understand. Like, these people, they're the type of people that, you know, they might go and search on Google for something. And to them, that's the internet, you know? They aren't these kinds of people that are constantly posting and follow every little news story and are hopelessly addicted to Reddit and all of these sorts of things. So they think, oh, if we just remove it from the search results, then it doesn't exist. And doesn't really work that way, right? And I think that's why you keep getting these idiots that think that they can censor the internet. It's because they're boomers. They really don't understand how it works, you know? certainly doesn't help, though. Wow, I don't even know how you say that. Guru sits? Guru sits? I can't. Gyro? Zoltan? Maybe just call him Zoltan. I mean, if you remove the archive, how much news can simply be changed in perpetuity? Well, people do remember, though. And I'm sure that other services will come along. No, that's not what's happening. Yeah. Uzi says, yes, but in my experience, when you're the guy who remembers, the people who don't outnumber you and think you're insane. No, what's happening there is you're being astroturfed. when that happens, what's going on is you're being astroturfed. Let me tell you something. When you're on Reddit or you're one of these places, okay, like or like the comments section of a news story, okay, and somebody is arguing with you like 5 levels deep, that person is either A, autistic, or B, astroturfing you. Normal people do not bother to argue so adamantly with somebody on the internet about something that, that many levels deep. Especially if you're going, several levels deep and you're like, there's a lot of votes, right? Like you're like 10 levels deep on replies and you're getting downvoted like -10 on Reddit. You're being astroturfed. Nobody opens those threads that deep. I'm not talking about your dopey internet Reddit. I'm talking about real people and real conversations. You tell a real friend it was a thing and you can no longer reference it because it's been changed. Wow. I mean, in cases like that, though, there's almost always a story on a conservative website about how it got memory hold, right? Like, the thing is, the way that this works usually, right, is some argument will come up, and then somebody will go and they will say, well, if you look up this old news story, it says this, right? And then they go and they change the news story after people start using it, right? And so everybody notices that they change it because they don't change it until people start using it, right? And then you'll see screenshots of it on a conservative website or whatever. And yeah, and then they'll say it's a conservative outlet, but like, are they, you really think that they're just outright lying about it, huh? Okay. Yeah. I really think that there's a lot of like gaslighting and astroturfing and a lot of the really marginally engaged kind of commentators, people are just not, are just falling for it, The indicators says to sell ZN. So why do you think the indicators say to sell ZN? Other than that the market order imbalance is slightly tilted towards selling. So I don't think that the imbalance that we're getting here right now is tilted enough to justify a trade. So if we kind of zoom in on it there a little bit, right? I would say that the flow is relatively balanced since this news release. So I don't really think that it's giving us a trade. We did kind of form a little bit of a liquidity hole here, so we are kind of in a decision point. Lewis Hill says, imagine another 4 years of this. Right. I mean, even if Donald Trump wins, it's not going to stop, right? These people aren't going to stop doing it until they really just get absolutely destroyed. Right, like, they will cling on, and it's not until, you know, the most deranged and brainwashed people among them realize that they've been had, until they go away. Yeah. Like, so, like, here's the thing. Okay. There was a part of me that kind of thought, oh, hey, when we elect Donald Trump in 2016, then it will go away, right? Or, okay, now that Donald Trump's not in office, maybe it will go away. And you know what? It didn't. It just gets worse and worse and worse. It just gets worse and worse and worse. And with Donald Trump, when Donald Trump got elected, what kind of happened was that the astroturfing narrative setting campaign just amped up times 10 and led half the country to being perpetually in mass hysteria. Every time there's a story and they're going hysterical about that story, and then as soon as people calm down and forget about that, they bring up another mass hysteria for them to get engaged in, and then they just keep them. And some of these people have just been stuck in that loop since literally 2016. And they've never left that reality. And you think, okay, this time around, if Donald Trump wins again and he wins like the popular vote, for instance, shouldn't that be enough to kick them out of it? I don't know, man. Like, first thing you do is you come in and you make all of these stories about that actually Donald Trump stole the election. That is something that they're going to do, man. I'm telling you, it's coming. Everybody's going to laugh at them. We're all going to think it's hysterical, but there's going to be those far lefties on Reddit and so forth that are going to be saying that Donald Trump stole the election. It'll happen. You watch. And then there will be like, oh, he's a Russian asset. Yeah. And there will be like really, really dramatic protests against Donald Trump. Like they will take it. You know, this happened when he got elected the first time. Like, Antifa was pretty active that day he got inaugurated, for instance, right? Those types are gonna really ramp it up. There will probably be a decent amount of drama between when he wins and when he actually gets sworn in. Yeah, and with media support, probably. I don't think that they'll be able to stop him, but it's like that guy at the diner. This is my first Civil War. Is that from the Civil War movie? I haven't seen that. I haven't seen whatever you're talking about. When you say diner, all I can think of is that scene in Akira where, you know, the motorcycle chase scene and the motorcycle guy like crashes into the front of a diner and like lands on the table of this nice couple that's having dinner. Right? When you say diner, that's the picture that goes through my head. So they're turning back down here. Oh, was that the Memorial Foundation dinner? Oh, okay. I don't watch that. I didn't watch too much of that. That's the one where like Donald Trump gets up and gives jokes and Kamala Harris didn't come, right? Yeah. I'm doing a little bit of browsing here. And I just came across the headline that I just think is so funny in the day trading subreddit. Okay, hot take. Your psychology is only holding you back because you aren't consistently profitable. Okay. I don't know what he means by that, but just the whole take of that just sounds funny. Like, well, if you were consistently profitable, then you would have good psychology or something. But maybe he's saying something that's similar to what I say. I don't know. Let's read it. Wouldn't anyone's blood pressure run wild if they weren't consistently profitable? No one who has high win rates is sitting there like, I'm too scared to enter a trade. This isn't meant to be a W. Actually, I think he kind of should be, because if you're the one that, like, listen, when you felt that fat tail, it's always in the back of your mind after that, man. It's always in the back, like, this could be the one where something bad happens and it just destroys a month's worth of work, and it's, yeah. This isn't meant to be a Debbie Downer, but rather a reorganization of your thoughts and our psychology is directly related how much we win, and how much you win is directly tied to your ability to predict price action. No, it's not, but okay. Because price action isn't really very predictable. Orders can be predicted. Price action, too much noise. Splitting hairs, but come on. Wow, I called the SMCI sell-off and made 500% on options. That's amazing. Good for you, bro. Here's from r/CS Majors. He says he put in 34 applications, 16 no answer, 5 rejected, 13 QAs, 2 offers. That's really good. That's really good. I've had about 10 go into QAs. Oh, I guess maybe it's about similar to mine. I've had about 10 go into interviews, and I've had to submit about 50 resumes or something like that. So I get like 10%. I don't know, I bet you that there's going to be all these people in the comments that are like, nah, that's actually pretty great, yeah. 34 applications seems like a skirmish, yeah. Dude, the response rate right now for applications, I'm told for most people, is like 3%, something like that. That means that like you have to put out 100 applications and you maybe get 3 QAs. That's insane. The labor, like trying to get hired in the labor market right now really is a nightmare. In fact, I would say having been both in the 2008 market and this market, it's a nightmare. Like I'm not going to say that the labor market overall is as tight as it was in 2008. That's certainly not the case. But like the actual experience is so much worse. Like The advent of AI and all of this stuff has just really turned the labor market into a hellscape. Hey, well, what did I tell you? If I go long 19, they'll eventually come back there. I kind of have to wonder now, though, if they're not going to go all the way to 13. They're definitely, I'm definitely getting enough of a move in cumulative delta here to tell me to go in. You know what we should do? How big of a... Yeah, let's do it on like a 10-minute basis. Well, let's try two. Let's try two of these, okay? We'll put... Where's R squared? R squared, we'll put it on twice. One period will be 10. One period will be 30. And for both of these, instead of an input series on price, we will put it on my cumulative delta 2. Where is it? Close, reset delta on session. Actually, just never. We're just doing it. Edit input. Cumulative delta 2. Okay. Okay. Yeah. So they're both giving me high signal right now. Maybe 10 is the way to go, man. I feel like that there's too many things on this to really make use of it now. Okay, Uzi sent a DM. Let's see. Yeah. Flashback to 2020 when the media treated just 661K. Wait, did they actually try and say that that was bad? Huh? I don't remember that. Hold on. Wait a second. Non-farm. Here's non-farms. Okay. And this was what? Final report before... Oh, well, it does say coronavirus there, so this must have been 2020. That's pretty crazy. Let's see here. So we're talking about October. Yeah, 661. Jeez. Is that a real? That for real? On NBC? What? Even at the time, I would have been like, are you kidding me? Ah! That's so funny. Dude, like, that headline is comical. That even at the time, that headline would have been worthy of mockery. Because, like, seriously, before the pandemic, you know, like between 150 and 250 is kind of like the norm, right? That's so crazy, dude. I don't know this guy, Brent Share. Who's he? Oh, he's from the Daily Wire. Jeez. Well, 19 is where the buyer average position is. They are bouncing there. Like I'm just thinking back to that, that around that time, seeing that would have been worthy of like making a TikTok pointing out what the numbers tend to be for people and showing that 661 new jobs added is like insane and good. That's a lot of new, like the COVID economy, the economy came roaring back after COVID. Like this has been the whole thing about COVID that kind of pisses me off, to be frank with you guys, in terms of the economic narratives afterwards, is that we came back from COVID so hard, so fast, so strong. We were probably going to pay for it. You can't have that much growth that quickly and then not have some after effects afterwards from it. And we did. And like that was the whole thing, was that like during Donald Trump, it was just this insane miraculous recovery. And everybody acts like, oh, like by the time Donald Trump was left, like the economy was in shambles and all of these no, like the economy was going great. And then it was like as soon as Joe Biden got put in and he added additional stimulus, and that was right when like everything started going south. And we started getting the supply chain problems and all of this stuff. Okay, Uzi's got something else for us. Professional and business services have now joined manufacturing with annual job losses in their respective sectors, while government and the government-dominated healthcare industry keep adding taxpayer-funded jobs. Yes. So one of the things that I have noticed, by the way, is that there's a lot of healthcare and insurance companies hiring out there. And I would have thought that it was just like, oh, those industries are more interested in me because I work for a healthcare exchange. But today I've been thinking, or maybe it's because that's just the only industry that's not reeling. Because he says, and it will remain a mystery as to what exactly spiked that sudden demand actuary. It's so wild to go like so when we're talking like general politics, earlier we're kind of having this discussion, with earlier politics, it's like there's a lot of gaslighting and astroturfing and all that sort of stuff with you, right? Okay. But when it comes to actual economics, it's a different thing. With actual economics, the reality is that most people do not really pay attention to the economy and do not really know what the state of the economy is. And I think that we as day traders have a hard time understanding what the average person's understanding of the economy is. Like, because for us, you get into it in your 20s and 30s, and you know all of the stuff. And you think, well, you can think back to when you were like a teenager, right? But it was like, yes, but now I'm an adult. What you don't understand is that most people's economic understanding stays at the understanding of a teenager. And there's a lot of people, and there's a pretty wide variation between like those teenagers' understanding of the economy. Like my teenagers, because I talk about this stuff, has a much stronger understanding of the economy than like most of their peers, for instance. Or like the difference between the kids that are like, really academically gifted and the kids that aren't, and most kids aren't. So most people really don't understand the economy. And so when you have online discussions with them, they don't remember any of this stuff. And it's just absolutely crazy to watch them try and like argue things and like look at the data post hoc and do some selection bias and only find the information that's favorable to their opinion. I gotta tell you, man, when it comes to economics, it's not wise to try and argue with somebody that is like an economic watcher if you're not an economic watcher, because the amount of data that they've seen is going to be exponentially higher than you. And so you think, oh well, and then I'm going to show you a chart and I'm going to find a piece of data, right? And what you don't understand is that they've looked at 20 other pieces of data that say that that's wrong. Right. But similarly, there are some of these guys like that are like academic researchers and stuff like that. I wouldn't argue with them on that stuff. I mean, I would ask some questions and I would kind of probe them and say, well, but what about this and what about this? But I wouldn't like straight up, if they say something, I'm not going to like straight up argue that against it because they know more about it than me, There's an account on X called Ethical Skeptic. The morality and healthcare data he's tracking is terrifying. Oh, boy. Okay. But anyways, so that's all just a big lead into the one that pisses me off is that overall imports from China literally went up like 20% after COVID. And I don't just mean like, oh, it died off and then it came back to trend. It wasn't like it did this. We're coming along and then it goes down and then, oh, but it's okay and we're back to trend. No, you look at the graph, it goes like this. Right? What is this? What is this area right here? That area right there is all you people buying junk from Temu with your stimulus checks. And that's why we had supply chain issues. and so many people try and argue about this when it's so clear from all of the data that that's what happened, is that we had disruption in the supply chain, but we didn't have a disruption in the demand. In fact, we increased demand. Yeah, you're going to get inflation, Nimrods. I can say Nimrod, that's not too offensive of a word, right? I've argued with people on this on many times. Many times. You can tell it like triggers me. It makes me mad to think about. You thought it was blow up Lewis. I hope your stimmies and new TVs were worth it. Yeah. I do have to say, the OLED TV is nice. Dude, there's this video. It's a Lorne music video, and it's Lorne Vault, I think is what it's called. And the music video for it is like this really crazy black and white animation that's kind of like ink styled. And on a non-OLED TV, like on an LED TV, you kind of get the blooming around it and all those sorts of things, and so it's not all that great. But when you have an OLED TV with the really high contrast and everything, the video is so insanely trippy. and it's big and it's filling the whole room and everything. Oh, it's so trippy. And I don't know if it's a video that I should let my kids watch, because the girl gets in this little pod and then the wires go into her and you can kind of see her nipples through her shirt, and it's one of those videos where you're like, am I gonna see something that I'm not supposed to see? It kind of makes you just a little bit uncomfortable, but then nothing bad happens. And then there's this thing where it looks in at her face and her face just like, oh, it's so trippy. It's so trippy. And my toddler is mesmerized every time. This is what we're reading. It would, you know, if it was TV ratings, it would definitely have the adult rating. But you can't see the nipples. You can just see that she has RT through her shirt. She's still wearing a shirt. So I don't, like, does it count? How bad is that? I don't know. But it's a trippy music video. I'm trying to justify watching it to people. That's what I'm trying to do. But I think it's a trippy music video. And it looks really good on the OLED TV, okay? Not worth the inflation, but I didn't buy it during the inflationary period, so. You know what I did buy? Was I bought my Sony a7 IV, and that's held its value pretty well. I think I've made more money from the a7 IV than I paid for it. I think so. That just brings me back to feeling sorry for myself and like, am I going to have to live off of just income from YouTube for the next? You know what, guys? I tell you what, the YouTube and the live stream do not make that much money. It's a few hundred a month. But since being laid off, I don't know what it is. It's just like magically, you know, referral links and all of these sorts of things are just coming through. Get good off of trading. Dude, in order for me to replace my income off of trading, I would have to have like $1 million wad. Seriously. You know, the weird thing on that side is that every time that I come in here and I'm like, well, I could just come in and take some silly risks. And, you know, as long as I do it in the right way, I could probably get away with it for, you know, long enough to bridge the gap and whatnot, right? But every time that I come in and I start to try and do degenerate things, it doesn't work out for me. So this is the thing that drives me crazy, is I go and I look around and I see all these people that are like claiming big profits, and I look into their numbers and everything, and I can see like, okay, they're degenerate, and this isn't going to work in the long term. But then when I try and duplicate their stats, when I go in and, you know, I take the same amount of risk and all of those sorts of things, I can't get their stats. It never works for me. No, most of these people are not. Well, I would say that most of these people think that they're taking calculated risks, but they are actually very short-sighted risks. Like here's the thing, is that when I take this approach, I'm sitting here and I'm saying, okay, how much am I going to make over 5 or 10 years? And is this worth it? And the reality is that in 5 to 10 years, the expectancy of these is zero. But most retail traders aren't looking at that. Most retail traders can't see it over a time horizon of a month. They trade for a month and they make tons of money and they're like, it works. And then they try and run with that, you know? Well, someone's making money. The people that are making money are the momentum funds and so forth that have long-term positions. So, like, if you look at the retail day traders and 70-80% of them lose money, where is that money going? It's going to the higher time frame players. Yes. Didn't miss PMI though, did I? Yeah, we got, let's see here. Which one is it? We have ISM manufacturing PMI at the top of the hour, in fact. But we get the S&P manufacturing PMI in 3 minutes. They're looking for a reading of 47.8. I didn't realize that we had ISM today. So that the ISM manufacturing number is a pretty big deal and is potentially a bigger deal. Well, not a bigger deal, but it's almost as big of a deal as the non-farms number. So are you testing your momentum? So what I have with momentum is, first of all, I would say not my strategy. Oh man, you got me thinking, BS. You guys keep saying something that, like, I don't know, I don't feel particularly ADHD today, but like maybe the mind is making connections. I've been a little bit burnt out this week. Not burnt out, but like not as active, I guess. But now all of a sudden I'm making all these connections and the brain's doing stuff. The momentum strategy that I have, I got one working. It's not mine, it's somebody else's. And I would like to come in and do some changes to it and all of that. But I don't think I have the data anymore. Oh, well, maybe I do. I have to go look at my account. But when I opened it up today, it didn't tell me like, oh, you can't connect. I have to go check that. Lately, my focus has been writing scripts for videos, which are pretty good. Like we got 3 videos here so far. Out. Well, I have one that I did all of the A cuts for, and I had somebody message me that wanted to edit, so I gave them a chance to try editing it. So we'll see. You know, they haven't gotten back to me yet, but I want to put it out on Monday. And they said that they would have it done for Monday. And that, but you know, maybe I want like edits and stuff like what he makes, and it takes another week. So then I've got like 5 new videos in the works that I've kind of like started scripts for, but some of these videos kind of have gaps in them. Like I want to make a video that is basically trading combines are for suckers. Funded trader programs are for suckers. And kind of go into a little bit of the math and the business statistics behind it and stuff. And I have like a really good stuff to show people with a Monte Carlo simulation. But after that, then what do you say? I guess all I can do is just give my opinion about it after that. And I don't like doing opinion in videos, but maybe that's what I got to do. But it's just like, okay, what am I going to give people that's going to keep them watching to the very end? I don't know. But that's where I'm kind of stuck on some of these other videos, right? Then I've been focusing on the indicators. I've been getting a lot of interest in the indicators. We've actually been selling a lot of the indicator package, which, by the way, is only $100 for a lifetime license, and that includes all future upgrades. So you get all of these things, and I'm hoping to make a release maybe. I think I want to continue letting it test all next week, but because I fixed some issues yesterday, it looks good today. Although when I refreshed here, this kind of screwed things up. Maybe I should fix that problem. There's one problem that I have, which is like if you refresh the chart, you're going to have a bar where half of the bar has historical information and half the bar is like live information. And how do you sort that out? Anyways, so I've kind of put my focus on those things. But I think that we should like put this latest indicator thing out and see what you guys do with it, and maybe make some one-off videos about those. No, I made one video that's like all of the indicators and like describes all of them.
Blocks out.
When really what I need to do is I need to make little videos that just go into that one indicator, right? Then I guess the next thing on the list probably is momentum. A momentum strategy. And like I said, I have a strategy that is working. Yeah, I have one that is working. but it hasn't really tried any of my tricks. So I want to look at, using some of the indicators like R squared, I like spread analysis and so forth on these. And then I also want to apply some of the Euler stuff, or Ehlers. I don't know how you say it, how he says his name, but I think it's supposed to be pronounced Oilers. Like the roofing filters and those sorts of things. See what I can pull out. I haven't been as interested in the momentum lately, to be honest with you, since making that video and getting it to work, because the performance of it since 2020 hasn't been very good. We might be coming into a period where it starts to do really amazing, but it kind of looks to me like that it did amazing during 2020, and those funds all got so big that like now the edge doesn't really work. So I've kind of been not as, I also they've been doing a lot of reading. At the beginning of this, I was doing a lot of reading, and I've kind of lost the plot. I had this one book that I wanted to read, and because I wanted to maybe talk to this guy, I haven't been able to get a hold of him. And then, after that, I was like, oh, I got to do like some of these industry type books and stuff. And I've been doing that, and I find them useful, but at the same time, I also kind of read them and I'm like, okay, that's not like... I need something that like moves the needle, Like what's gonna move the needle for me right now, and I'm just not finding it. It's just kind of the same sort of like, yeah, you do this and maybe it helps you, maybe you doesn't. It's kind of hard to tell, and like, when it's all of those things, how do you decide what you should be putting your effort into, Have you tried applying it to the other? No, that's not how momentum works, BS. The way that momentum works is we're applying it to a universe of instruments. So if you're looking for a momentum signal on a single issue, on a single instrument, that's not momentum. It can be years before a asset starts to show momentum. Could be years. So you want to be running momentum on daily. So if you haven't watched my video on momentum, just go and watch that. But I'll summarize it for you really quick. Retail traders think that they know what momentum is, but they really don't. And the two things that are kind of critical to make a momentum strategy work that retail traders are missing is that you run it on daily bars and you're running it across multiple instruments. So if you only run it across one instrument, that instrument might just go sideways all year. And so it's going to be years and years and years until you even have like a real trade, right? And second of all, you really have to run it on daily bars and hold positions for possibly many months or years. Because the way that the momentum strategies work is they're basically looking for some sort of a signal that momentum is starting. And the issue is that most of the time, momentum isn't starting. So it's a low win rate strategy. But when it wins, because you've gotten in at the beginning of a trend, when you really do catch a trend, you make so much on those trends, and that's where the money comes from. Well, in order to really make enough to overcome the losers, you have to hold it for multiple days. You will start to notice this if you start to get into some of the back testing. Because everybody day trades, this most active session, the market kind of does weird things during that period, and it's kind of hard to make money during that period. And so you constantly see some things where it's like, okay, this signal looks pretty good, but then it doesn't make enough. By the time that the session ends, it doesn't make enough. Yeah. So, or like, let me put it a different way. I'm coming in and I have a stop of 8 ticks and I have a target of 8 ticks. When you lose, you get stopped out. When you win, you end up having to exit before your session ends and you take 6 instead, right? So even though like you have like a good probability on it and all of those sorts of things, you don't get the MFE that you're supposed to because you can't hold it over the session. And that's what I've been finding in some of my backtesting with the order flow indicators. This is like, if you're not holding overnight, you're leaving some of the biggest gains on the table. So in order for momentum to work, you really have to hold overnight. The math just doesn't work out any other way. And that kind of comes into like, okay, so for this sort of a thing, maybe you have to go for smaller takes. So I should come back here to show you what I'm talking about now. But I also should make some videos about this stuff, because now that we've really got this all working, I think there's a lot of you guys that want to do back testing and stuff that are going to want to start doing this. I think it's this one. Yes. 1022, yes. And if I run it, does it still work? Yes. So if I come in here and I change the stop to something more like 4. The percent profitable goes down. So where is it? Optimization. Oh, I got rid of them. Okay, that's okay. I didn't have the loss limits on it, but yes, deviation trigger is the thing that we want to optimize. -0.2 to +0.2, and increment by 0.01. And then what was the period that we were using? Period 30. Save history. Right here, faults. And optimize on max net profit. Really, I want to make money, you have to take it as a full-time job in business. I think that if we really wanted to make, like, really truly wanted to make money doing this, yeah, I think we'd have to spend more time. We'd have to shift our strategy a little bit. We would maybe have to trade stocks. No, there is one that comes out with a total profit, but only after 4 trades, huh? And that's not the way that we want. Wait, am I doing that correct? Because deviation trigger should only go to 0.2. Oh, the max should be 0.2. There we go. Ah, interesting. So it is better to go with it. Well, this is the order flow. It's interestingly enough that that's not, that the win rate is not that great. But the ones that it's selecting are like, you know, didn't take very many trades. Yeah, okay, thank you, Uzi. It is time for ISM. Let's pay attention here. So it's lower than forecast, 46.5 versus 47.6, and prices paid 54.8 versus 49.3. Yeah. That is a really stagflationary looking number. So far they're reading as it's weaker than anticipated, so that should be good for rates. But that prices paid is concerning. I think that the best play here would be buy gold, because there could be a situation, you know, maybe they decide that the prices paid really hurts. Excuse me. Maybe they say that the prices paid really hurts the treasuries and they sell off a little bit. I'm still of the opinion that there's a really high risk that the Federal Reserve prioritizes the labor market over inflation in such a situation. So maybe them moving up is the correct thing. But if we're unsure about that, I think that for gold, that should be a positive. So maybe I would buy gold. Not entirely sure, though. I was starting to wonder if backtesting is a trap. Well, a trap? I wouldn't say that it's a trap. What it's really telling you is the market is really efficient, right? The market is really efficient. I think I need to come back over here and say keep 50 results. And that way it will like give me all of them and I can kind of see which ones are actually taking trades. Okay, so there are some that do take a lot of trades. And these are in the range of 0.01. Oh my gosh, yeah, that's terrible. Why is this not? Oh, because my wife is in the car. That's why. On my phone is trying to play the card. It's so funny. So it is telling you something. Right. Going with the imbalance is better than going against the imbalance. So there is an edge here, right? So this is something that I've read from all of these guys. Like if you look at the people that did the what were they called? This first fund that really tried doing quantitative trading sort of stuff. They basically said that there are signals, but the signals are smaller than the noise. And no, it's not the Turtles. This is the name. It's a company's name. It's like the Probability Company or something like that. Was basically, okay, let's take a bunch of math people and make a fund and see if we can make money. And then they took years and years and years trying to find an edge, and then finally they did. And they all say that, like, there's more noise. The noise is bigger than the signal. So there is like an advantage that you can pull out there. You just have to have a lot of data to be able to pull that signal out from the noise. Well, so you gotta understand what this is doing, BS. What this is doing is it's saying, over the last 30 minutes, what is the percentage of market buy orders to market sell orders? And if there is, you know, so we're backtesting over this particular parameter, but it's basically, it's saying, you know, over here with these ones, if it's more than 60% buys, then we buy. And if it's more than 60% sells, then we sell. It's not Renaissance. It's like the Probability Company. Something like that. Anyways. And then it goes with it. So it's saying, what it's saying is there is an edge in looking at the imbalance between market orders and to not trade against that imbalance is what it's saying. So it might not necessarily be a good entry condition, but it probably is a good filter. Probably is a good filter. Granted, we only have a few months of data here, too. It's a problem. But you can backtest the order flow and you can see it. So it seems like it makes a good filter. I guess this has kind of been a problem in most of the things that I've backtested, is that like I can find some sort of an edge to it, but it just doesn't seem like a good entry condition for some reason. Well, how do you turn it into a profitable position? So if you're coming in here today and you say, okay, all of the information that I have says that we should be up today, that they should be buying, and the economic news and everything, it comes out and they should be buying. But then I come in and I look at my market order imbalance and it says 0.4, meaning that there's more than 60% sellers. Then I'm not going to take that trade, because you don't want to trade against the market order imbalance. So there was one of the things that I wanted to change in the back test was like, okay, what if you wait? What if you say, okay, I want to take a trade, but I'm only going to take it if it comes back X ticks, something like that. But anyways, I was just getting back to the thing, which is like, okay, back testing is a trap. Back testing is not a trap. Back testing is a trap would mean that, like, when you go and you do a back test, it's kind of something designed to make you waste time or to lead you into incorrect decisions and ideas and things like that. Okay. So it is not a trap. Backtesting is the only way that you can really acquire empirical information to assist you with your trading. But what you are going to find with your backtesting is that markets are very statistically efficient. Markets are extremely statistically efficient. And it looks like even when we get into order flow that it's kind of statistically efficient. That even if you've got a signal, that they are able to do all sorts of crazy things to kind of jostle you out of those positions. I guess the other thing that we were supposed to do there, let me bring that back up. Is set my stop to be really big and my reward factor be 0.5. And if I do that and run that optimization graph again, does it give me something different? A little bit. What if I really did it crazy? What if I was really, really degenerate? Huh. So see, it's things like these, like at 72% profitable, but it doesn't make money. Doesn't make money. One thing we could try, though, is we could try a vote strategy with this, right? We could say, take the market order imbalance and take the resting orders and R squared on cumulative delta And, you know, those are all factors that it uses in some sort of fuzzy logic to give me a score of like how good it thinks it is. And then if the score is high enough, it takes a trade or something like that, right? That might be a better setup. But let me try this one more time. Okay, it's not that backtesting is a trap. It's that day trading is probably not going to work for you, because really what those results are telling you is that it's really hard. Markets are just really random on short time frames, and it's just really hard to make money day trading. At least day trading futures. You know, you were doing stocks and you knew stuff about the stocks and you were an informed trader and stuff, and maybe that would help. Maybe that'd be a different story. If you're swing trading, it's a different story, because there are some strategies that we know of that are profitable over, you know, in the swing trading perspective. But for day trading, it's really hard to make money day trading. Markets are just extremely random on short time frames. But that is what it's really about. Sort of strategies that I think are going to make you money on the day trading are going to be ones that are either like super fast or to like trade a ton. Well, I'm kind of feeling here that like the PMI should be a bigger deal than they were. Oh, it's the prediction company. It was the prediction company. That's what it was. The Prediction Company was founded in Santa Fe, New Mexico in March 1991 by Doyne Farmer, Norman Packard, and James McGill. The company used forecasting techniques to build black box trading systems for financial markets, mainly employing statistical learning theory. In September 1992, Prediction Company entered into an exclusive contract with O'Connor and Associates, a Chicago derivatives trading house, to provide investment advice and technology. Soon after, O'Connor merged with Swiss Bank Corporation, which later merged with Union Bank of Switzerland, UBS. Prediction Company's contract was renewed multiple times, and in 2005, UBS purchased Prediction Company outright after being a wholly owned subsidiary of UBS. Prediction Company was acquired in 2013 by an affiliate of Millennium Partners. Prediction Company was shut down on September 1st, 2018 in 26 years of operation. Prediction Company only had one losing year, which was in 2007. And the book that I'm talking about, do I have it over here? It's buried in the stack. Doyne Farmer recently released a book about chaos theory, and he talks about the Prediction Company, and it's good stuff. I don't know these other guys, Norman Packard, James McGill, but these were this was basically like the first true quant firm. They were like the first ones, and then, you know, guys like Renaissance and stuff like that came soon thereafter. That's funny. If I search for this other guy, James McGill, I just get he thinks that it's Better Call Saul. Yeah. These were also the guys that developed a strategy for beating a roulette wheel using a toe-operated computer. Yes. And these are all guys from the Santa Fe Institute. Follow them on LinkedIn. I wonder if I could just go to Amazon. It doesn't look like I'm getting anything. Oh, where's his LinkedIn? But I want Amazon. I want to see if he wrote any books. Doesn't look like it. You know what we could do? Trading. I think there's a way to go into this to be like, like the topic. How do you do this? How do you do this from Amazon? New releases. Books. Which book? Which book section? How to day trade. Oh, buying Rouse Cameron. Okay. But where does it tell you the category? Investment analysis and strategy? Analysis and strategy. Okay, but then how did I get to okay, so now we gotta come back here. I'm gonna do it on this one. Back. The new releases, books, business and money, investing, analysis and strategy. There we go. A stock trader's almanac. Okay. Oh, that's an old book that's just been re-released, isn't it? You weren't supposed to see that? Oh boy. Wait, do I know this guy? He looks familiar. Yeah, he's on CNBC. hidden truths that make the critical difference between understanding the world and being dangerously naive. Okay, let's see if there are any reviews. Yeah, probably not gonna buy that, but it's interesting. Who's Sam Weinstein? Sam Weinstein, Secrets for Profiting. Last time I did this, I found a new book that was actually really good. Wow, Series 7 exam prep for only $21.83? Okay. Oh, the Al Brooks has a new book out, folks. Oh boy. Oh boy. I'm not a fan of Al Brooks at all. Find reliable patterns. I'm going to bet you that they have no actual statistical information in the book. Come on, give me the bad reviews. There's a 1-star review. Wait. Top reviews. Nah, okay. Fine, we're gonna go to who's the one that didn't like this. I've read many trading books over the years. This one seems to have a lot of promise, but it's so poorly written that any valuable information it has is trapped in it. Feels like there wasn't an editor and that went through and did even basic due diligence in terms of reading the material. So often the author introduces terminology and doesn't explain it, leaving readers like me completely confused. Even worse, the book goes into detail on how to enter trades, but from what I've read, there's absolutely no discussion on where to exit them. Entering trades is the easy part, exiting, I don't know. Not well written. Most of these people are just complaining that they find it hard to read. Oh, this must be a re-release because they're saying from 2010. So it must be just a new edition of it or something. Yeah. Oh yeah, it was this one. Originally published in 1988. Trading Indicator Cookbook. Okay. NBA betting. There you go. Bayesian methods in finance. There you go. Okay, so we've looked at all of the books released recently. Immediate access to 99 powerful Python scripts crafted to mine and process the exact data you need for successful trading strategies. Oh boy, there's 3 books in this, and this book is... oh, this one's not bad. It's about $30 for a hardcover. Okay. No reviews. But now I'm interested. I'm gonna save that one. No customer reviews. I don't know what the one simple strategy we have is, though. Can you give an election update? Well, I haven't really seen it. Nothing really that interesting happened yesterday, other than, Donald Trump campaigning dressed as a garbage man and all that sort of stuff. We're kind of, I guess it is Friday, huh? Today and Monday, it's really going to be like, there's going to be a lot of noise. Okay. So what I would tell you is that you've got to be really careful about the content that you're consuming and this falling into selection bias. I saw so many TikTok videos yesterday where there's like liberals were like, Kamala is actually totally going to win. Like all the people that really know what's going on, they say that Kamala is going to win. It's just that these polls are out that they're fake polls and they're pushing it towards Trump. But the people that really know, they're only picking the good ones. That says that Kamala's going to win, right? It's selection bias all the way down because people don't realize it. But like, you've kind of got to have a way of sitting down and saying, like, here is all of the information that we have, and here is the information that is actually effective of predicting the election, and here is all of that information. Because what people will do is they'll say, here's this one little spot in here that's pretty good at predicting the election, and it's going the way that I want it to go, and so that's one that they tell you about, right? So I will tell another thing that happens is they will give you numbers that seem like they are really favorable in one direction when they really aren't. Like they'll come out and they'll say Republicans are outpacing Democrats relative to last election in pre-election voting, which is to say that like more Republicans have early voted at this time than compared to last election. And the problem is, well, yeah, some of those people that voted on election day are voting early, but that doesn't really tell us, how many Republicans are turning out relative to Democrats overall, because we don't know what the turnout on election day is going to be. So that's a piece of information that doesn't really help us, right? But here's some pieces of information that do help us. How many registered Republicans are there versus registered Democrats compared to 2020? And in almost every instance, there are more registered Republicans now. That's advantage Republicans. Another one would be who are voters that don't turn out very often, but this time they're planning on voting. If you go and you look at vote polls, people that don't usually turn out, like they haven't turned out in the last few elections, but they say that they're turning out this time, those people are overwhelmingly, like something like 60 to 70% overwhelmingly turning out for Donald Trump. Okay. So there's a couple of things, but then again, I'm still kind of giving you a little bit of a selection bias here, right? I mentioned two things. Those are two things that are in favor of Donald Trump. I don't really know of any piece of information that's like really that would be really useful, but is coming out in favor of Kamala Harris. But like, I don't know the whole universe of indications that we would actually have, you know? And so, you know, it's just kind of like a storm of information out there, and it's kind of difficult to sort out. And it's going to be like that all weekend and Monday, Tuesday. And then afterwards, probably still won't know who won until like next Friday. So should be a fun week. Okay, Bayesian methods in finance. Bayesian statistics can transform financial analysis into more predictive and adaptive process within the rapidly evolving tapestry of global financial markets. The ability to quantify uncertainty and integrate diverse streams of information stand as a crucial advantage. This book expertly demystifies the intricate principles of Bayesian thinking, guiding readers through its application across a spectrum of financial contexts, from asset pricing to risk management and portfolio construction. Through a careful blend of theory and practical insights, it introduces the reader to Bayesian frameworks that eclipse traditional markets in both flexibility and robustness, making them indispensable tool for modern investors and financial professionals. Also, no reviews on this one. Read a sample. Wow, their sample gives you a lot of the book. Oh, you know what? That makes me think about this one. Read sample. Cryptocurrency, forex data, economic indicators, social media, sentiment, news headlines, commodity prices, central bank rates, interest rate futures. Wait, what is this? Okay, this is interesting. Below is a Python code snippet that illustrates how to access and process stock price data using the AlphaVantage API. This snippet demonstrates extracting the data, reshaping it for analysis, and handling it for trading decisions. I don't know if this is actually going to give me what I want. Something that's actually useful, to be honest with you. Follow this guy. Maybe do some LinkedIn browsing in a second here. But in the meantime, let's go and check out Archive. Not a lot of submissions. How do you see, like... Well, that's kind of a bummer. I had one of these. What was it? Oh, no, that's not what I want. That's a freemium paywall thing. Well, I had this link to a blog. I wanted to go and read this blog, but I can't remember, but I don't have it now. Oh, well. Dang, they kind of came back down through this pretty quick, you know. But this is like just so typical for non-farms, right? Is like all of the action after the initial jump seems to like ignore or contradict, and like in general just not make complete sense. This is why I love LinkedIn. Look at this one. Types from PyQuant News. Types of sleeping positions. Investor, quant, pro trader is sleeping on, you know, face down. No stop loss, and they're tucked in safely, laying on their back. Oh, he's not asleep. He's not asleep. Spoofing on the offer in ZF? I don't see that completely. Maybe that big order at 07. It's not that big. Wow, Fidelity Investments via staffing firms is demanding to see 5 years of tax documents for verification of employment. I just got off a call with a completely different staffing company than the one in this screenshot. They told me the same thing. This is a massive violation of privacy and feels like a huge scam. Is this even legal? That can't be real. That can't be real. This appears to be a scam. Aha. Yep, it's not Fidelity, it's a scam. Oh, I gotcha. Oh, man. Oh, that's crazy. You know what? Even my LinkedIn is a little bit like there's not as much going on. Like it's already showing me stuff from a few weeks ago. Oh, it does look like you're getting a small little reprieve. If Costco requires proof of membership, then so should voting. Oh my gosh. Well, I've done all of my browsing here to look for interesting stuff, but it looks like it is a Friday. And everybody is just ready for the weekend, I think. They will stick around for another 10 minutes, but... guess we should read Zero Hedge's analysis of the jobs numbers. Yeah, Federal Reserve probably does cut next week, huh? In our non-farm payrolls preview last night, we said that October payrolls report may show the first negative print since 2020. Well, moments ago, the BLS reported the highly anticipated number, and it was close. The monthly print was only 12K, a huge drop from the pre-revision 254K in October and just 13K away from a negative print. The print was so low, it was only above the two lowest estimates. That means it was a 3. You see, that's where the way that they tell this, they say it's a sigma miss to these guys, but it's not like relative to like past. Anyways. And of course, as has been the case for the entire Biden administration, previous months were revised sharply lower. Once again, August was revised down by 81,000 from 159 to 78. Whoa. And September was revised down 31 from 254 to 223. With these revisions, employment in August and September combined is 112K lower than previously reported. This means that even after the monster September revision, when 818 jobs were removed, 7 of the last 9 months were again revised lower. That means that once again, the November jobs, that means that once the November jobs are released, we can be virtually certain that October will be revised negative, maybe. But wait, there's more, because, well, the total payroll number was just barely positive. If one excludes the 40K government jobs, private payrolls was in fact negative to the tune of 28K, down from 223 pre-revision last month and the first negative print since December of 2020. In other words, we were right when it comes to the actual non-parasite government jobs. To be sure, as we noted yesterday, a big part of the drop was due to the one-time event discussed, including the Boeing strike and hurricanes Helene and Milton. This was what the BLS said on the topic. A household survey was conducted largely according to standard procedures, and response rates were within the normal ranges. However, the initial establishment survey collection rate for October was well below average. However, the collection rates were similar in storm-affected areas and unaffected areas. A larger influence on the October collection rate for establishment data was the timing and length of the collection period. This period, which can range from 10 to 16 days, lasted 10 days in October and was completed several days before the end of the month. More importantly, the BLS said that it is likely that payroll employment estimates in some industries were affected by the hurricanes. However, it is not possible to quantify the net effect over the month change in national employment hours or earnings estimates, because the establishment survey is not designed to isolate effects from extreme weather events. There was no discernible effect on the national unemployment rate from the household survey. Ironically, while the BLS was unable to quantify the net effect from the hurricanes, it was able to calculate that the number of people not at work due to the weather surged to the third highest in recent history. In other words, the BLS now has an excuse to blame the plunge on, it just doesn't know how to quantify it. Translation: if Trump is president next month, expect the downtrend to continue with little to no mention of the hurricane as the BLS prepares to admit the true state of the labor market. If, however, Kamala wins, the November jobs will magically rebound even as downward revisions accelerate and shall be back to their fake normal. And of course, today's catastrophic job sprint gives the Fed a full carte blanche to again cut 25 basis points next week, even if the plunge was all hurricane. I don't think that the plunge was all hurricanes, though. The rest of the jobs report was not that exciting. The unemployment rate printed at 4.1%, unchanged. The number of unemployed people was little changed at 7 million. But then they give tons more stats. Finally, delta between government jobs and private jobs was a whopping 12K, the biggest since COVID. This means that more government jobs were added in October than all private jobs lost in the month, just in case you needed to know how the Biden administration avoided a negative total headline print. So I need to apply for the government, huh? Well, we're back to the open, by the way. Well, that's interesting. You know what has got me thinking on this now is like, you know, there seems to be some sort of systemic short in the treasury market, and it's like, they bought it. Okay, then we're going to sell it again. Like, I don't know if I can really explain this action today. the order flow is, I could totally understand them kind of selling it back, but like, I don't know, it's like to the tune of 40K sold. It's a little Well, guys, I don't really have anything too interesting for us today. I'm gonna just keep digging, man. It's like, again, I would really like to find something that moves the needle. You know, not just like, oh, maybe we'll see, I want to see some actual real results from something. I'm just not finding it right now. On any of the endeavors that I am involved with right now. It's tough out there, folks. All right, I will see you guys next week. It should be an interesting week. Till then, stay excellent.